the trade.
Yeah.
Hopefully that makes sense.
Yes, the whole, yeah, it makes sense. That's the whole key to trading supply and demand the way that I have come up with. Okay, supply and demand levels are everywhere, as you can see, but many levels don't work and others work. And so, why do they work or why don't they work? So we don't know really. So we just have rules to give us more odds to take those trades. So by
Right.
using the rules to draw levels and trend lines and all that, it will allow us to stay on the safe side more often than not. But still, we'll have many losses, many of
Right.
them. But that's part of the game. Okay. So the thing is that after all that rules and levels and a lot of emotional things going on in our heads, I had to come up with some other ideas to be more mechanical. Okay,
Hmm.
so by
Hmm.
watching by looking at the charts for quite a few weeks, studying and all that by myself, I came up with this realignment thing, which is helping me a lot to be more mechanical and consistent. Because by having very strict rules, what will happen to your mind is that you will not allow your subconscious to come up and take control. So by having the realignment, you will have very, very strict rules that will tell you, okay, the monthly trend line is broken, no more selling if we are in an uptrend.
Hmm.
Sorry, no more buying. If it is in an uptrend, no more buying. So let's go to. I'm gonna look at some charts. Let me share my screen with you.
Okay.
Okay. Let me tell me if you can see my screen now.
Yes, I see it.
So
Hmm.
let's load. I don't know which pair. But well, let me take a look at one demo trade that I'm running here on. I think it was eBay. Yeah. So I'm long from long here on eBay.
Okay.
So we're gonna
Hmm.
go through the whole process to make
Okay.
such a decision. Because as you can see, the daily is down, the
Right.
weekly is down. So why the heck did I go long there? Because
Hmm.
that's a very important thing. I mean, because what most traders do is that when they see red candles, they will behave like the bulls fighting with a bullfighter. You will see the red. I mean, like I say many times on the webinars, the red capote, the red clothes that the bullfighter is showing to the bull, and then the bull will come running into that red cloth, and the bullfighter will be behind that red cloth with a sword, and the bull will be
Right.
killed.
Hmm.
So I think that's a good analogy for trading because when people see
Yes.
the red candles, well, they behave like bulls. Like they don't see anything else. They just see that price is dropping, they have to sell. But what they don't realize is that they would be selling, probably not all the time, against bigger time frame imbalances or demand with the bigger time frames in an uptrend.
Right.
So that's not a good thing to do.
And
So
I hear you mention that all the time, and I wrote that down. You also mentioned like demand is being respected and supply is being removed.
exactly.
Right. So that's another thing I wrote down if you can explain. But this would be great if you could, like you said, it's in a downtrend, um, but you're long.
Yeah, exactly. But the thing is, what is your sequence?
Right.
Because it all matters. It all has to do with the sequence. So if you are trading maybe imagine that you are a scalper and you are using a 4 hour, 1 hour, 30-minute chart, 5 minute, 15 or whatever, and your entry time frame is the 5 minute maybe. Okay, and you are using this lower time frame combination up here. Okay, so let me one
Hmm.
thing. Let me show you. Let me load this presentation thing here, tool that will allow me to make it a little bit better. Yeah, see? Now you see the
Hmm.
pointer.
Yes.
So uh, when you start using these lower time frame sequences, then you won't care about the higher time frame sequences. So you will just see the daily 4 hour, 30 minute, 50 minute, and all that. So if you look at the daily, this is clearly down,
Hmm.
obviously. So no problem, we have to sell. But if we are using the lower time frames, for our entries and not even looking at the bigger time frame. So no, sees eyes that don't see is a heart that doesn't feel. I don't know how to say that in English. So
Right.
so
I've heard it.
if you don't see the bigger time frames, how can they affect you? So it's like they never existed. So you just trade. So what I normally do if I'm not trading the lower time frames, what I do is this. I just hide the time frames that I'm not using. So I just make my mind subconscious say, hey, I just have the 4-hour time frame. The lowest time frame that I have is the 4-hour. I don't care about anything else because I don't have access to that information. It doesn't exist for me.
Right.
It doesn't exist for
Right.
my brain because it's all about play. To me, my humble opinion is all about playing tricks with your mind. So your mind is playing tricks with you, and you have to outsmart your mind. So how can we do that with these little tricks? So if the daily is down, okay, then what can we do? Sell. But what is your entry time frame? You have to first decide what is your sequence. Are you going to be a swing trader, position trader? I think you are. So you have to look at the biggest time frames available on your platform. So we start with the monthly. Okay, this is what we are doing. Let's start with the monthly. So when you look at the monthly, what is the trend that we have
The trend
here?
on
I
the
mean, at the
monthly-
time when price dropped down there, this was the candle. Sorry, I think I selected the wrong tool. Vertical line. That was the candle. Let me draw it white. That was the candle when my entry happened. Okay, so when the monthly was there, was the monthly in an uptrend or in a downtrend? Can you
It was down.
it was down. Why?
Um,
I want
You
you
said
to
we
tell me
do-
why exactly.
okay, I would say it was. Well, no, it was.
There are things. I
Well,
mean,
if-
you said
If
yes.
I'm looking at them, I'm
Yeah.
sorry.
No, sorry for interrupting you because this is very important. You said I asked you about the trend, and then in about 1 second, you tell me down. So
Right.
that's because something within your mind, I don't know what rules or what variables or scenarios you had in your mind to tell you so fast that we were in a downtrend, because I don't see a downtrend. So you have to speak to yourself. So how do we find a downtrend? Tell me. There are two ways of defining a downtrend, as described from the lessons. And they are very simple. So one of them is, you said that before when we started talking. What happens in a downtrend? To the demand
In
zones.
the demand zones, right? But the valleys you mentioned.
So I'm just asking, on when we have an uptrend, what happens to the demand zones?
Oh, they demand zones are respected.
Are respected, yes. So
Yeah.
what about here? Are the monthly areas of demand being respected?
Okay.
Yes or no? Any area of demand on the monthly has been removed, taken out?
See, that's the part that I really need explanation and help with. What is it being respected and supply being removed? That's the part that's confusing to me.
Yeah. So that part is key because I don't know if you are aware. There are many other trades trading supply and demand, many other strategies. All of them work if you manage them correctly. Money management is perfect. Is not perfect, but it's needed for that. So any strategy, good or bad, will work if you do it correctly. So the thing here, these are the central rules, and for high probability, after studying the charts for a long time, and you will see that happening in life many times, is that in order to have an area of demand validated, we need to take out the opposing area. This is like a fight between David and Goliath. Who's going to win?
Mm-hmm.
Goliath. It's going to win most of the time. But we just remember that David won Goliath once, and say, hey, if David won Goliath once, that's going to happen more. But that's not the right attitude. The highest probability event in a fight between David and Goliath, or between a dinosaur and an ant, will be that the dinosaur will win and that Goliath will win. Sorry.
Right.
So the funny thing about this is that most of us, including myself in the past, right now I don't, is that I thought that the ant was going to win against a dinosaur. That is not high probability.
Right.
So, but when we start trading and we see things on the chart, I'm talking about this psychology thing because I believe this is crucial to all this. Because first of all, your mind needs to be convinced of what you are seeing and thinking, and then after that, you have to work hard to imprint those patterns in your mind and say, hey, this is what I'm looking for. I don't care if there is an opposing trade that I might take, because that trade is not high probability. So stay away from it.
Right.
It will work sometimes, of course, not sometimes, many times, but it is not part of your rules, so you don't take it. So that's the hard thing to do.
Right. No, you're right.
That's the hard thing to do. So this is why we have to have very, very strict rules, and most importantly, you have to speak to yourself while assessing, while analyzing the market, because if you don't, you will allow your subconscious to come through straight your mind, take over your mind, and then he will say, like now, what is the trend on the monthly? And you said, down.
Down, right.
Why did you say down? Because it is not down. In any case, it would be consolidation, because as you can see, look at this, rally, 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 and it's making high highs all the time. It didn't make a lower low ever. Just here, a little bit, okay, over here, but nothing else. So the monthly is in an uptrend. The only thing that's going on here is that there is a lot of trading here in the zone, and nothing is happening. It's ranging right now after a big rally in price. But that doesn't mean that we are in a downtrend. A downtrend would be this over here on the left,
right,
but nothing else. But this is because we're making lower lows, removing possibly all these areas over there. You see, this is a clear downtrend, but this is not a downtrend. This is just consolidation. This is not a downtrend. This is just consolidation. So in order to make a decision as fast as you made when I ask you what is the trend on the monthly, you have to have those rules imprinted in your mind, engraved in your mind, and say, what is an uptrend on any time frame? Demand areas are being respected, supply areas are being removed. So is that what's going on here on the monthly, yes or no?
So the answer will be no.
So what is going on here in the monthly? Is it an uptrend, or is it respecting demand areas and removing opposing areas of supply, or is it doing the opposite?
So there was I would say now, after your explanation, there was an uptrend, but however, right at this point, it's in consolidation.
Exactly. Why is it in consolidation? Because we have very strict rules to make that decision.
And it's not making any higher highs or lower lows. It's ranging in between those two zones there.
Exactly. But there is one more rule that would tell us instantly that we are in consolidation on a monthly. We use trend lines.
Trend lines.
So
right.
the trend line that connects the latest two valid peaks, which are this one. This is not a peak. This is a rally, base, rally, base, rally. These are CP patterns. Okay. They are before this high happened, the valid trend line would be this. Why? Because we have one, two, three CP patterns. So the trend is broken. But now we made a higher high here than this high. So we need to adjust and look for the previous valid valley. This is a valley here, drop, base, rally, and made a higher high. And then this is a CP, 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 valley. So we connect this valley with this valley. And now, after connecting these two valleys, the trend line is again broken by this candle over there. Solidly broken.
Right.
Open, high, low, and close underneath the trend line. So now the trend line is solidly broken by more than one candle. We just need one for that rule to be true. And now we have two candles. This one candle, bullish candle, could close here or touch the trend line, so that wouldn't be valid. So we have 2 months of consolidation right now. So in consolidation, we can go, price can go in any direction.
Any direction.
Okay, that's consolidation, sideways, range. So we use confirmation for trading, unless we hit a higher time frame area of demand or supply, and we are high or low in the curve. So here, let me drag the indicator, rectangle reading indicator there, so we can see the curve and all that. Okay, so here, as you can see, let me do this. I don't know why this trend line was removed, but well, this is it. So here, as you can see, the monthly is in consolidation. So when we are in consolidation, what does normally, what have you read about consolidation, or what you've done in consolidation? We can trade either way if we trade the extremes. If we are at the end, extreme areas of that consolidation, that is up here or down here, okay, then we could try to go long or short, because that time frame is in consolidation, so price could go anywhere. So if the monthly right now, let me place it here, monthly equal to consolidation. So we have that on all time frames, and let me make it like 50, like that. I will make it over here. Let me make it better, like 40, something like that. So monthly is in consolidation. Okay, at this time when the trade happened. So, and this is the price happened to drop down there. So now we go to the weekly. What is the trend on the weekly? At that moment, price was there. Okay, my entry was there. So skip, I mean, from your mind, this doesn't exist. From the vertical white line to the right over there, this doesn't exist. Okay. So at the moment that I took the entry, okay, what was the trend on the weekly? This doesn't exist.
It would say, okay, if that other part does, looking at that doesn't exist, putting my hand off that, there we go. A downtrend.
Yes, it was a downtrend. Why was it a downtrend? Because you need to ask always the same question. There is a lesson about that on the forum that says how to assess when we have a downtrend, an uptrend, or a consolidation. And there are 2 questions that you have to ask, always. So if you do that internally without speaking out loud, then you will allow your subconscious to take control. So this looks like a very silly thing.
It does, and then listening to you and watching and reading is one simple thing, but this one-on-one I think is going to be great, because so price rallied down, and so you got, well, it's not a rally, which is up, so it's what's the wording?
The drop, I mean.
The drop, price drop, base, so you got 2, which you can draw your trend line.
Yeah,
going
exactly,
down.
like here, from here to here.
From there down, right?
Down. So you read when you read price, it's incorrectly drawn. So you read price rally, but you have to do it out loud. I mean, even if you are, I don't know if you are married or not, but if your wife is listening to you, don't care about that. Don't care about.
Right.
So it's okay. What are you doing, darling? You're speaking out. I mean, who are you speaking to? So to myself. So here's a rally base drop. Look at this drop. It bases here. It's not a 50% candle. It bases and then drops. Rally base drops. Rally base drops. So now we can connect all. This is the downtrend there. Okay. So look at this area over here. Okay. One sec. So I will make it like this. 1 second. I'm moving the tools to a place where I can see it. There it is. So here, look at this area over there. What is that? What do you see here on this area?
Consolidation.
Yeah, this is what we call compression. I mean, there is nothing there.
Nothing. Right.
Everything this area there is a reaction to this area. This area is a reaction to this area. This is a reaction to this area. And this is a reaction to this area. Look at this. Everything is a reaction of everything to everything previous, to previous candles. So there is nothing. Okay? Nothing at all. So if there is nothing and we hit a higher time frame area of supply, which is up there, okay, there, see, we hit a higher time frame area of supply. Look at that imbalance. Okay, what do you think is going to happen? After, look at this price. Price was rally for ages, years, from 2009, and now it reached a level that existed from 13 April, for April 2004, and then hit that area. It couldn't close above that area. Okay, it couldn't, and then dropped like a rock. So that tells me, but look at the level. The level is, look at this. This is important. What happened to the level? It was overshot. But look at this candle.
Overshot. Right, by a few pips.
It didn't close. This is very typical, because up there, what will happen normally there is that the breakout trader will start buying there. They will see, hey, the monthly, historical monthly area, they are that high. Well, they will not see supply. They will just say a high. Okay, people that don't trade supply won't see supply. They won't even care about this drop. So they see that it was broken, and then what will they do? They will have buy stops orders up there, and they will start buying aggressively, because they see all this consolidation. They see a breakout. Hey, after years, this is the first time that it breaks up above that area. Let's buy, and many will buy. And what are buy orders there? They are sell orders. So you may ask yourself, what the hell is Alfonso saying? Buy orders are sell orders.
Right.
That's impossible. If you buy, you buy. How can you sell? So
right.
The big boys are here lurking like hyenas. So you buy, and then when that happens, let's look at the 4 hour, so you can see. Look at that. They buy after the break. They buy, and then they buy here again. Okay, here they buy again. And what is going on here? This is a fake out. So
right.
So what happens here is that all the buy orders, what will happen is that when they buy, the stop losses will be here. There will be like a cluster of stop losses around. Let me draw it with here. Okay, they buy there, and the stop losses will be around here, and the stop losses will be around here, and the stop losses will be around here and here when they buy. So what happens when price starts dropping? Because the big boys know that many people is buying. So those buy orders, when you close a buy order, what kind of order does it become into? What is it, does it turn into? When you buy, in order to close the trade, you have to sell.
So
all these buy orders are sell orders. So price drops. That's the picture of a breakout, of a fake breakout. So when you see bigger time frames, historical highs and big resistance on the monthly, weeklies and all that, and you don't see a close above, don't take it. I mean, stay away from it. I mean, wait for a serious breakout and a nice level. Okay, here on the daily, as you can see, it broke out. You see, the daily broke out. Is there a daily area of demand anywhere?
No.
The only level of demand available there at the time was that one.
Mm.
Okay, that one. So, and the trend line available there, we had this trend line. Okay, and a more aggressive here one after that rally. So when you see that price has not closed on the weekly, monthly above that big resistance areas of supply, don't try to go long. Don't try to outsmart the market, because probably what will be going on up there is that the big boys are selling, and they need buyers in order to have those sales.
Mhm.
Because if you want to sell 1 million, well, I mean, imagine 100,000 shares on eBay, you need 100,000 buyers for those shares.
Right.
How do you get the buyers? Allowing price to break through that area. So all breakout traders will start buying. So that will be filling the sell orders of the big boys and start dropping. And that's the anatomy of a breakout, really. So when you, if on the other hand, you saw a really great level of demand there, which this is not great because price is overextended. Okay, so but if we had a more an uptrend, like, let me show you an example, maybe farther back, I don't know, a big level like this, a nice level like that, something really clear like that, you see, with a gap there and fill gap and all that. Look at how price dropped into that area and reacted. But this is a mess. Okay, this is good, and fill gap, and then happened to work, you see. Levels like this, forget about this. This is yes level, I mean. So this is a mess. So you have to look for those kind of levels. Okay, so here on the way up, we didn't have such a level, was overextended, and this didn't close above that area. So when you see that a big time frame area on the monthly here, for example, didn't close above on the monthly, or neither on the monthly nor on the weekly, forget about that. Wait for at least a monthly area of demand, which is wait for at least to the opposing area, to an opposing area on the time frame when you see that fake out. That is the monthly. So price drop into the monthly area of demand. Okay?
Right.
Because all this was compression, so you forget about that. That is nothing. The only level there at the time was the opposing. I don't know why all this happened here. All these numbers, crazy. Let me load this again. eBay, 1 sec. Should be somewhere. There it is. Okay. So the thing is that since the monthly was in consolidation, then what can we do? We just can buy on monthly areas of demand. If the monthly was the trend was over, okay, and this area of demand on the monthly, okay, would have been taken out, then we would be in a downtrend on a monthly.
So
and
now, stop right there, Alfonso. When you say that area was taken out, that means that pip would have dropped below,
yeah,
in order to take that out.
Yeah.
Right.
Exactly.
Okay.
Exactly like that.
Okay.
So here, on this area over there, on the monthly, that what happened there? I don't know what's going on here in my charts. I don't know. But the thing here is that this monthly area was taken out for a few pips there. I don't know now. I cannot take control of the zones. I don't know why. There. So that monthly area was something like that. Okay. So
Right.
let me drag the indicator again here. That's why the problem. Yeah, this is the problem. Why? Exactly that. And now let me save it just in case. 1 sec. There it is. So, and I didn't have, this is an old template, so let me draw the zone there. So if we are ranging, we made a higher high. So if we made a higher high, now let me ask you a question, okay? A very important question. Is this valid area of supply still valid or not? This area here.
It's not.
It's not. Why?
No, because like you just said, it made a higher high. It removed that.
Exactly. So you remove it. But
right.
It didn't close above that high. So that tells you that even though that area was taken out, there was no close above on the time frame where the imbalance was detected, and there was no clear level. Look at this area over here on the weekly. Look at this.
And Alfonso, when you say it didn't close above, you mean the pip wasn't above.
I mean the close of this candle. See that close?
Right. It wasn't above.
It wasn't above the highest high of the zone
high.
Of this area over here. So when you see that, you say, okay, that could be a trade. Okay. So this is a trend. So let me go through the whole process. This is a trend. So we were in an uptrend. I mean, we made a higher high, overshot the area of the monthly. So the next thought, rational and logical thought, is we buy because it broke out. Okay. So now, since we are doing the sequence, and at the time when that happened on this candle, we had an uptrend on the monthly. Okay. So we had an uptrend on the monthly. So, and what caused that higher high and trading through that highest high in history? I think. Yes, higher high in history. This is very typical, to make a higher high in history and then drop like a rock. So, what made that price rally that way? What caused that? This area of demand, isn't it? And now look at this on the monthly. Let me zoom in a little bit so you can see. Look at it. It kissed the level, kissed and rallied. It was a kiss. Okay. So this tells us that there is a lot of buyers down there, because it just kissed the level. It couldn't even penetrate it. 10% or 5%. You just kissed it, kiss and go, touch and go. So that's great, because that tells you that there is a dinosaur down here, and you don't want to go against that one, because the print of the dinosaur, the fingerprint, okay, has been left on the sand, and there is a dinosaur. I don't want to go against that.
There's a lot of buyers.
A lot of buyers down there. Okay, lots of buyers. So it's like here. Look at this. Look at this long wick there, long tail. It drops down there and then rises. What happens when you retest that area? Look at that. It rallies again. But then the second time it came, look at this rally. Look at this rally. Rallies, and then could price make a higher high?
No.
It couldn't. So look at this. Could price here make a higher high?
Yes, it did.
On the first test, yes. So it happens.
Yes.
So it drops the first time and then makes a lower high. So are you interested in buying again? It couldn't make a higher high.
No.
So this is why you have to read all. You not only have to draw the zones and be able to have the experience and hardware to draw the zones and see how the zones work, on which ones are being taken out, which one are being traded through and fake out and all that. So, but also look how price is reacting. Candles are emotions. So here, high, we are allowed to go there on the daily. Probably there was a daily area of demand down there. Probably, I don't know. We'll look at that right now. Okay, let me mark it like that, with that trade line, with that vertical line. So the first time that it reacted to that kiss trade, touch and go, with that's called a bullish signal there. This is a hammer, or sort of doji or gravestone, they call it that. Sort of hammer, doji, gravestone. So it dropped there, made a higher high, so I'm allowed to go down there to drill it down to a lower time from the daily, and then maybe take a trade there. We will see that now. And then price rallies again, and it can't make a higher high. So that tells me that the buyers here are exhausted. They couldn't make a higher high. So if I want to buy, I will have to wait for lower price and a fresh area of demand. So where did price dropped? Look at this. Perfect entry. Right to the area, rally base rally. That was the one that made a higher high. Okay, and then dropped into the area. And what happened there? Another kiss trade. And what this kiss trade did it make a higher high?
Yes.
Yes. So
yes.
So there will probably be lots of buyers there, the same way that would probably be lots of buyers there on the first retest. So you see some of the variables that are used to take that trade, but we'll see now the details, the exact details. Okay, but you are seeing now on the bigger picture. Now you're seeing that this kiss trade made a higher high and all that. And also, not only that, but this area over there, this kiss there, was the one that removed, overshot the monthly supply area, the historical supply zone. So this is a very important entry, a very important area, price area, because it was the one that caused that rallied and removed this opposing area that comes from here. So I am interested in that one. Okay. Now let me look. So by the time the price rallied into the area that high, what was the trend? So we don't see this. What was the trend on the weekly?
It was up.
It was up because it was doing what?
It was rallying. It rally, base rally, and it was up, and
it was up. It was up because it is removing. Okay,
it was removing the
supply zones on the weekly, on the monthly. Oh, sorry, let me switch to the weekly. Sorry, should have been on the monthly. It was like that. It was removing. Taking out supply zone, opposing zone, and respecting demand zones. That was on the monthly. It was up, and now on the weekly. Let's analyze this. So on the weekly, look at this. We had mentioned this. We had there, that vertical line was the first time price dropped. Okay, the first time price dropped. Where did it drop to? From here. Look at here. And this on the monthly there was a kiss trade. There was this. See that long reaction to that area. Okay.
Right.
Okay. So look at here. What is this? Drop, base, rally. So this is an area of demand. Okay, so and what was the trend here? Drop, base, rally. Drop, base, rally. We connect this like that. The latest two valleys, we connect the trend line. So the monthly trend at the moment was up. The monthly is the weekly. The weekly trend was up because demand areas were being respected, supply areas were being taken out. On the monthly, the same happened. So both the monthly and the weekly are up. So what can we do? If the monthly is up, can I buy on the monthly? The monthly up is playing out, and price is flying, is rallying, doesn't give me a pullback, so I switch to the lower time frame, which is on the sequence, which is the weekly. And if the weekly is up, I can't buy the weekly here. You see, we are priced as here. How can I buy here? If the weekly is up, I mean, I'm gonna have to wait for a few weeks,
Right.
for a few candles. A few candles mean few weeks.
Mm-hmm.
So
You have to go to a lower time frame.
So, okay, maybe there is a daily level over there and that will allow me to go long because the monthly is running, the weekly is running, both are in an uptrend. I can't trade those charts. So I have to keep on zooming in, drilling it down to lower time frames until I reach the time frame that has lost the upward momentum.
Mm.
So when we find that time frame, we stop. Because that means that we cannot go lower. Because the upward momentum, the market dynamics have changed on that time frame. You see the logic?
Yeah, yes, that explanation, Alfonso, was awesome. Drilling it down from the monthly, the weekly, and like you said, they're both up. Now we have to continuously go down. Yes, and you've given me another thought. You make me think that I need to focus on one currency now, and really understand and analyze, talk to myself, and make sure I have a good understanding of the trend and the higher time frames and what it's doing.
Yeah. You have to. You know what I've done in the past? I mean, I've gone through not this instrument because I don't really trade eBay. I'm doing it in demo just to prove to myself that everything, the rules work the same way. Okay.
Mm-hmm.
So, and this works really well. So the thing is that what I've done in the past is that I will follow the candle formations and draw the trend lines, and that can be done very well on Forex Tester because we will have like a cascade of windows here with the monthly, weekly, daily, and 4-hour time frames, and you will see price moving, and you will see how they react. There is also one very important indicator that it is explained on the forum, which is this one, multiple time frame vertical line. That is an indicator created by an Italian guy, a member as well, which is called Francesco Cardinale, and that will allow you. It is explained on the community. It will be very useful. So when you drag it on the chart, you will see a vertical line like that. Okay, so you open several charts of the same currency, and you have, like, for example, imagine the monthly here, the weekly, the daily, and the 4-hour. 4 charts in cascade. So when you move this vertical line on the monthly, it will clone that line on the 3 time frames to the right, and you will see what price was doing on each time frame. So that will help you to understand how price is reacting to zones on the lower time frames. When there is a weekly or daily bullish engulfing pattern, what happens on the 4-hour? Well, normally there will be a 4-hour bullish engulfing pattern as well. So it will be it is a video that explains that in a lot of detail. I don't think you have seen it, but it is in the community. Okay,
I'll have to look at that. Yes.
Take a look at that. But a Forex Tester will do the same thing, but you won't be able, you will not see what happens, what is going next, what is going to happen next, because you don't see price action. But on MetaTrader, when you are doing this forward, this back testing, visual back testing, you know already what happens. So it is not a good way to test, because your mind, your brains remembers that we have made a high. So you will use the current rules that you have in your arsenal to prove to yourself that your rules are valid. But you are not proving to yourself you are not proving those rules. You are just seeing what you want to see to validate your rules. So that's very tricky. So this is why you have to use another software that will hide price action, and you will not know what's going to happen next. So you are really testing a rule set because you don't know what's going to happen next. Also, that's when Forrester 2 comes in very, very handy, because you don't know what's going to happen next. You just
Right.
apply the rules.
Mhm.
Okay, but
Yes.
a visual backtest is good when you are analyzing the market and you see what price did and all that, so you can do that. And that indicator that I told you, multiple time frame vertical line, will help you a lot. Okay, so
Okay.
going back to the analysis here on eBay, we both agreed that we had a monthly uptrend and a weekly uptrend at this moment here. Okay, as you can see. So monthly and weekly are up. So we drill it down to the daily, and there it is. So at the moment when price was here, okay, you will see it was rallying and rallying and rallying. Look at this: drop, base, rally, base, rally, drop, base, rally, base, rally. So we have this trend line, okay, like that. So
Okay.
what happened to the trend line? Here, right there.
It's broken.
So what do we have now in the sequence? Monthly up, weekly up, daily consolidation. What is our, if we want to go long, and this is a very, very important question. This is crucial. Once you understand this, you will understand the whole strategy. So we use the sequence, and we said that we must stop at the time frame that has lost the upward momentum, because we know that the monthly and the weekly are both up. We would do the opposite thing. I mean, if the monthly and the weekly were down, then we would be looking for a descending trend line to be broken. Okay, but now since the monthly and the weekly are up and the daily is up, but right there at this point the trend line is broken, and
Trend line is broken.
then you look down and left always and see what we have here. Is there any level of demand that could bother us from price dropping? Look at this. This is a reaction to this. Okay, this made a high, okay, but already price reacted to that area, and it couldn't make a high.
Mm-hmm.
Forget about this. This one, is this valid? No. Why? Because the trend line is broken. Forget about this. Also, it is a reaction to this one over here. Forget about this. The rules are telling us, forget about all this. It's not me saying it. It's the rules.
Mm.
You see the logic?
Yes.
So
the trend
sorry.
line is broken. So, okay, monthly up, weekly up, daily is up, the trend line is broken.
Exactly.
And the next step, Alfonso, you would consider what not consolidation. Well, prices.
So right now, when you look at the chart right here, what is the trend on the daily? Up or consolidation?
Right there, consolidation.
So consolidation. So you stop trading.
Mm-hmm.
As soon as you have this little candle there,
Mm-hmm.
broke see that they broke the trend line with the open, high, low, and close. It's underneath. You stop going long.
Okay.
Automatically. I mean, like a robot.
Mm-hmm.
That's it. You stop
That's
trading, and then you look down and left, and start looking at what is there. Is there a compression on the way up? Is there a good level like this? Look at this level. Drop, base, rally, and look what it did. Unfilled gap. This is the strongest level possible of demand with an unfilled gap. This is what price did. It dropped down there, and you say, okay, it dropped down there. Why do I buy? Can I buy there? Yes or no? Just tell me by looking at the daily. Just 1 second. Give me 1 sec. 1 second. Sorry, I'm back. You see these? You see now that price reacted from there strongly, and then
Strong.
very, very strongly, and reacted to the unfilled gap, and this is a great level. But you will see many levels like that they will not work, and then you will start asking yourself, what the heck happened there? That some levels with unfilled gaps work and others they don't. Why? So
I want to ask you a question, Alfonso. Once the trend line here on the daily is broken, and right there where we talked about it's in consolidation, would you wait and would you sell in a certain location here, or would you wait here, like you said, for it to hit that zone to buy?
So there are two answers to that question, and there is one video. I don't know if you received the last video that I created. I think it was yesterday. On how to counter trend.
Counter trend. Yes, I saw that. I haven't looked at that in total detail, but I did see that. Yes.
So when you see that level, that video, you will understand many things. But I'm going to tell you now. Okay? Because there are certain conditions that you have to look for in order to counter trend. But like as explained on the lesson, which I'm going to show you, when to counter trend using the sequence, what we are dealing now with, and the wow trades, the thing is that you need to see this, all this, something like that. You need to see engulfing patterns going against you. You need to see that a higher time frame, like the monthly or the weekly, has been hit and couldn't close above. This is the situation we're dealing with. Price cannot close above below in the last month low high. This support resistance, very similar. Price cannot trade through and close above a flip zone. Candle close versus, this is explanation between candle close and versus trade through. And then look at price action to the left, what I was saying here. Look down and left, and see if there is compression or an efficient rallies and drops in an efficient rise and drops. An efficient rally means that price has been rallying and the levels have been tested on the way up. That's efficient, like a stair-step ladder. So it goes up, drops, retests, higher, high, drops, retests, higher, like this. Okay, rally based rally. This is a CP over there, drop. Okay, then retest the level, then rallies, drops, rallies, retest the level. So it's efficient rally. So when we have efficient rally, those are great for counter trend, because since all the levels are tested, that means that the buyers, the buy orders have been filled, and there are no more buyers. So you have free room to trade to trade down to the opposing area. So, but now comes the realignment rules, okay, which is the counter trend lesson here. This realignment and sequence rules. Okay, it's the same thing, because the realignment is inherent to the sequence, because what it says, what the sequence says, the rules say, and it is very simple. This is so simple that sometimes you say to yourself, how can this be so simple? Okay, so the thing is, if the month is up in an uptrend and the weekly is in an uptrend, we have two time frames aligned in an uptrend. You look at the daily, and the daily breaks the trend line. So the daily now is out of alignment. What we are expecting to see is that price will drop to the closest weekly area of demand, because the weekly area is the closest time frame, higher time frame, is still in an uptrend. So if the weekly is up and the monthly is up, and the daily now is not up anymore, it's consolidating. So what price will most likely do is drop down to the closest area of demand on the weekly time frame. But you say, is there a weekly area of demand down here? Do you know if there is one or not? Let's see.
Is there a weekly?
If there is a weekly area of demand here, then this is a valid trade. But
then it's a valid trade.
this could be a nested area of demand within a weekly area of demand with the weekly and monthly in an uptrend. So what price could be doing here is that it could be realigning realignment with the weekly time frame, which is
Now,
still up.
Alfonso, this area of demand here, how do you determine that is the weekly area of demand?
By looking at the weekly chart.
So we go back to the weekly chart.
So, but I don't even need to look at the weekly chart.
You don't. Okay.
Because this is a weekly area of demand. Why? How? Because we have here a few candles on the daily, so this will probably be a weekly area of demand. So let me switch. Maybe I'm wrong. So let me see there. Go really down to the weekly. Oops. What is there?
Okay. Okay.
A weekly area of demand.
Of demand. I'm getting I'm understanding the lingo talking to you like this a lot better. So now I'm seeing what's going to happen is when I listen to your video more, I'm going to see it in a whole different light.
Yeah, that's why this session will be of greater help to you, I'm sure.
Yes, it will, definitely.
I'm sure.
Okay, so let's go back to the daily.
So let me do one thing here.
Okay.
Because now since the because this level was overshot already, so we don't see the lines, the trend lines that the indicator draws. So let me do this by doing this. Let's make this purple line, the proximal and the listal line, okay, for our discussion. So we will know that the purple lines are, oops, what happened there? The purple line will be that weekly area of demand, right there. And then we switch now to the daily. And look here what happened. From here to here. I think I'm going to make it another color because it's not like, for example, let's make it like yellow and like that. Beta will be better, and then this one area there. Let me clone it with Control key, and then this is it. So I'll remove that one. So look at that. Price dropped down to this area over there. This is a daily area of demand nested within a weekly area of demand, which comes from that yellow line to that yellow line. Proximal and distal line. This is the proximal line and this is a distal line on the weekly. So there you have all the rules playing out together and you're putting all the pieces of the puzzle together. Monthly up, weekly up, daily down. This is the trend line. Okay, daily down, and then price daily realigned with the weekly uptrend, and then rallied. That's the way. That's the way it works. Most of the time. So when you look at the monthly and weekly time frames, and you see they are up on the weekly up, monthly up, weekly up. We are here. Okay, but you see that the weekly made a higher high and all that, so that validates this opposing area. But when you look, and this is very important as well, when you look at this over there, you say rally, base, rally. So this is a CP pattern there, like that. And now let me do this. So I believe you will understand this much better like this. From here to here, we've got 240 pips. Okay? From here to the highest high, we've got 310 pips. What does that mean? There's a rule, a very important rule, that look silly to many when they read it. Why did you come up with the 2-to-1 rule?
The 2-to-1. Yeah.
Do we have a 2-to-1 imbalance? If the base is 220 and the imbalance is 330, something like that, in order to have 2-to-1, we need to have 440.
400. So no, it's not.
So if it is not, this is not valid area of demand. That's it. So this is a way you are seeing now the rules playing out and preventing you from taking a trade there.
Right.
You have to wait for lower. Did this level made a 2-to-1?
No.
This one down here.
Well, oh, down there, yes.
Yes, that's the level.
Yes.
But then you see a lot of candles dropping here, red candles. When you see that, what does your mind think? I don't want to
sell.
I want to sell.
Which is wrong. Yeah, you want to sell. Yeah, right.
Don't sell.
Don't sell, right.
Why? Because monthly and weekly are in an uptrend. This is just a bigger retracement. They are, like the explorers, the jungle explorers are looking for a dinosaur sprint that they heard about by the native people from Peru. I don't know, I'm just making up a story. So it's like, okay, let's look for that print. Hey, we found it. There it is.
Yeah.
So forget about that. So you want to counter trend? No problem. You can counter trend, but remember where you are in the curve and what the monthly and the weekly time frames are doing, and the daily. So the thing here is this, and it is explained here on the video that you will be able to watch. It's like 45 minutes. We have that as an area. We have that as an area. Weekly, monthly time frame hit, but couldn't close above. Okay. We have this as an area. Price action to the left, compression and efficient rallies, which is this. Compression, nothing here, everything is a retest of everything else. So when you have that scenario that we saw that we couldn't close above the monthly, and all that we have seen till now, you will understand this much better because this video is being recorded, and I will give you a link to watch it, no matter as many times as you need. So when you have all those scenarios, and we had like 3 of them here, then you are allowed to short. Where? Here, to start with. This is the area that broke, that caused the imbalance up there within the week monthly area of demand, okay, of supply, monthly area of supply, there, okay, right there. This is a big drop from there. So that is the area that caused the break of this trend line, as you can see. And also it removed this area of demand, and also it removed that area there. It will drop down there. So this could have, if price drops from there, then I would have been expecting a trade short from there to here. That's the idea. But if that doesn't happen, as you could see, then we have another level here formed. Okay, because made a lower low and removed this area over here. Okay, removed. So when that happens, then what we will have is a descending trend line. One peak, second peak, that allows that second peak that made a lower low than the second leg of the first peak, made a lower low here. So that allows me to draw a trend line. So that allows me to short there. So I would expect to short there, price to rally into there, and then drop down there. Did that happen? None of them. I mean, none of them happened. So, and now this is a daily area of supply daily area supply, and what happened here? Price dropped into a weekly area of demand with the weekly and the monthly in an uptrend. So forget about all, because the monthly and the weekly are in an uptrend. So when the weekly is in an uptrend, what happens to the weekly areas of supply? If the weekly is in an uptrend, they are removed. What is this here? Is it a weekly or a weekly area of supply or a daily area of supply? We are in the daily chart, in the daily time frame.
That would be
Daily, a daily.
That's the daily.
So if the weekly is in an uptrend, and in an uptrend, the weekly areas of supply tend to be removed, what do you think is going to happen to a daily area of supply, one time frame lower than the weekly? What do you think? It will be removed. It's again David against Goliath. So go with a bigger time frame. The weekly area of demand over there is in control. Forget about daily shorts or any other time frame lower than the weekly, because now the weekly is in control and it is in an uptrend with the monthly as well. So what happened here is that the daily, okay, made a bigger retracement to realign with the weekly and monthly uptrend. So now let's look at price action over here. So here at that moment we did have that trend line, you see, because we had those levels over there. So this is a great example, I mean, where there are almost all the rules are here, so it's great. Okay, yeah. Many times it is not. This is a valid area. Okay, so read price over here. What is this? Read me price with the drop, base drops and all that, valleys and peaks. Read me price from here down here. Tell me what you see here. This is a rally, base, drop. What else?
Yeah, rally, base, drop, and then base, drop, and then it rallied again. It did not make a higher high, and then it dropped.
Yeah.
Again.
So what is this? Is this a peak or not?
This is valid because it didn't make a higher. It didn't go above this the blue pip there.
Yeah, but what I'm trying to put forward is this: is this a peak or not? This is a strange.
Oh. No.
Why not?
Because it didn't go above. It didn't make a higher high above this.
But we don't need that. I mean, we don't need to make a high. In order to validate a peak, we need to make a lower low.
A lower low.
A high highs for a valley here.
So then it is valid.
Look at this. Look at this candle. Dropped.
Right.
Rally, base, rally, drop, and then rally, base, drop. So this is a V, and that inverted V. This is like that. So this is what we have. So now that we have that, then we connect the latest two.
So we can
picks.
Connect that, right? Okay.
This is why it is very, very important that you read price, what it's doing, and make a differentiate between a peak, valley, and a CP pattern. So okay. That is what we got. Do you agree with that? Because now comes a very important thing after this. So now this is what we can do. Okay.
Okay.
So, are you mindful of the WOW trades and the rules?
No.
So there is a lesson there that you will watch. You have to read, and this is the most important lesson of all the lessons. This is a new pattern setup that I came up with a few months ago, and ever since this has been the most profitable one. I mean, this is how, I mean, when you learn about it, you will see that market repeats this pattern over and over and over and over again, in conjunction with the realignment and sequence rules. So by combining the wow trade and the realignment and sequence and nested areas, once you are aware of all that, you know what's going on all instruments. You will see. So there is the wow trade. There is a very typical trade that happens, is that the wow trade is called wow because because I like that name, because normally when what happens, once a realignment occurs, like in this case, let me remind you what is going on in the market, because you have to know that monthly's up, weekly's up, daily now is in consolidation, because this candle over there and all this afterwards broke the daily ascending trend line. So what is going to happen normally is that price will drop into a higher time frame area of demand that still is in that trend, uptrend in this case. So it will drop there. If there is so now comes the decision to say, what am I going to do? Am I going to set and forget my trade, or am I going to be a more conservative trader and wait for a confirmation? So there are two ways to do that. So this is a set and forget level, because it is a nested area of demand within a weekly area of demand there. Remember, all this had not happened. So that is a set and forget, because monthly and weekly are up, and the daily was just trying to realign with those two time frames uptrend. So that will be a valid trade right there, with my entry at the proximal line and my stop loss a few pips wiggle room underneath. That's my entry. Okay, so you are not sure about that entry and you want to confirm. Okay, then you have to do it on the time frame on your entry time frame. In this case, my entry time frame will be daily. Okay, you can drill it down to the 4 hour if you want, but we'll see that later. We have time. So here price drops down there, and what does, so let me do this, that level over there on the daily, which is I think is here, let me remove it so we can see it better. There it is. The weekly is over here. Okay, so look at this. Drop, base, and fill gap, rallied. What did this level do over here? What are the actions that it accomplished? There were a couple. Try to tell me.
Well, it it definitely hit the weekly demand, and now it's rallying. So it definitely hit that zone, and to realign with the weekly.
Yeah. But and then it rallied, and what did it do? What did it accomplish when it rallied?
It removed the where the trend line is. It's making a higher high.
Not only that, I mean, but what happened? What happened to the trend line?
Oh, it was broken.
It was broken. What caused the break of that trend line? This.
Right. The weekly area of demand.
Not a weekly area. I mean, the weekly area of demand caused it as well. But since we are not trading the weekly, because they are very wide levels, we drill it down to the daily and 4 hour. and 4 hour. But now, for the sake of simplicity, I'm just doing this on the daily. Okay, otherwise we will have to go to the 4 hour again. So, but you have to do the same analysis on the daily, on the 4 hour. So if the daily was up here, for example, okay, then you drill it down to the 4 hour and wait for the trend line to be broken. If the trend line on the 4 hour, like here on the daily, is broken, then you have to wait for a daily area of demand. So it all you drill it down from the monthly top down analysis until you find the lowest time frame that has the momentum broken. And then when you find it, if it is the 4 hour, then you have to wait for price to reach the daily area of demand, valid area, in order to continue going long. In this case, we stopped at the daily because it was the daily that lost momentum here. So we cannot trade a 4 hour, 1 hour, 50 minute, 30 minute, whatever. It is underneath the daily. All the levels are non-tradable because the daily itself is not tradable. So it negates all time frames underneath the daily.
Okay.
That's how it works. I believe it's very, very logical. Okay, very logical. So once the weekly area of demand is in control, then this level over there caused the break of the trend line with this candle over there. Okay, this one candle, that one there, and then this one made a high, and this level over there that was here, over there, which was pretty bad structured. Look at that, very bad. It dropped, then it rallied in the same candle. This is not a valid area, tradable area, because we have a rule that says that in order to have a level to be validated, we need it to consolidate away from the level for at least one candle, like here. It drops, it consolidates away from the candle, but if price rallies on the next candle into the level is negated. Why? Because we are trading supply and demand imbalances. What do you think is this? An imbalance or a balance? If price drops and the next candle rallies into the area, this is the picture of perfect balance. Because otherwise, if there was an imbalance, price would have kept on dropping without pulling back to the level right after its creation. But that didn't happen. So this is not tradable. Also, as you can see, price dropped, rallied into the area, invalidated the area. All the buyers there, all the sellers, sorry, all the orders are filled. Not only that, it came into the area right again on the next candle. So that tells you that this level even have lower probability, because not only one candle rallied into the area right after the creation without consolidating away down here, okay, and then two candles removed most of the sellers in that area. So when price returns to that area, what happens to the area? That no longer sellers. That's it. So you analyze this and you say, okay, now price drops into the weekly area of demand, which is, by the way, well formed, fresh, made a higher high, monthly in an uptrend, bullish engulfing pattern, and that creates a higher high, more than 2-to-1 imbalance. So I want to go long there. I missed this trade, okay, or I didn't trust the set and forget methodology, and I didn't take my entry here. I'm gonna wait and for new levels to be created that will confirm, even though the confirmation word should not exist, because there is nothing that can confirm that your trade is going to work. Okay, so but we use that terminology. This area of demand confirms that there are lots of buyers on the weekly area of demand. Not only that, it is reacting from the weekly area of demand, and it caused the break of this area of supply. So that validates this area because it removed an opposing area of supply. This is supply because it removed this area of demand. So all the rules are connected at that moment. not only that, but this level over here is not valid anymore, because as by reading press action as we did, all the cells there are filled, all the cell orders are filled, so you expect this area to be easily removed. The trend line break rule here, the trend line is broken with this area, then that tells you that you no longer are allowed to trade here, because the monthly and the weekly are in an uptrend, and now the daily downtrend that would have allowed you to take short trades is also broken. So how come do you want to trade here? Why? If the monthly and the weekly are in an uptrend,
You don't.
you shouldn't. You can go counter trend if you are in those trades soon enough, when they have been created, when the levels have been created. So here it was at the moment where the daily lost momentum within the monthly area of demand here on the left. So there, this is a trade. Here, this is another trade. If and only if the opposing area in control and in an uptrend takes control. Because if the monthly area of demand takes control, forget about daily shorts. Because in an uptrend on the weekly areas of supply will be probably removed and demand will be respected. So demand here is being respected on the weekly. This is a weekly area of demand, as you remember. So this is daily area of demand. So they will probably be taken out. Not always, but most of the time. And since we are trading the odds, I mean we are not trading the most of the time. They're not always, or they I think, or they may be. No, we are trading the facts. We want facts, and this is why we have rules. So this would have been a trade, a confirmation type of trade that price didn't pull back into that level. So price rallied, and if it had dropped into this area, then I would have played the trade. I would have placed the trade. But there is a very important thing over here that happened. What is this? Rally, base, rally. Is this an area of demand or not?
See, I don't know about that.
Why not?
Because you mentioned you would not have. You said you would not have taken that trade.
Which one? Down here.
Once it hit that weekly area of demand.
I would have taken. I mean, if I have been trading this eBay thing at the time, my entry would have been right there at this price.
Okay.
Here.
Okay, so you would have.
I would have longed on set and forget, because it is a nested daily area of demand, and an area of demand on the daily nested within the weekly area of demand, with the weekly and the monthly in an uptrend.
So your entry would have been right.
This is what we call in the lessons a momentum and location type of trade. The strongest trade setup available on supply and demand. Because you have the momentum of the bigger time frames, weekly and monthly, and you also have the location, because it is not only has a momentum on the weekly time frames and the monthly, but it is also located within a monthly or weekly area of demand. So that is a momentum, because it goes with the bigger time frames, uptrend, and a location type of trade, because it is located within a weekly and monthly or monthly area of demand. So that is the strongest available setup of supply and demand. And also it happens that we have an unfilled gap, which is the strongest level that we can have on supply and demand. So a lot of confluences. So this would have been the entry, but you didn't take it. No problem. You wait for confirmation. Then this would have been another entry if price would have dropped into that area. But what was in the middle? In the middle was between my entry down here, my potential entry in the middle, we had this. This is the level that caused the break of the trend line. Not this. And here comes a very important thing. This level inherits the demand property of this level, because as long as the trend is up, because it is this exact area here on the daily, this daily CP pattern, continuation pattern, this is the one that causes the break of the trend line and of this level. So as long as this level is holding and the market conditions have not changed on the daily, which they haven't, and we have one candle here and two candles consolidating away from the level, which is compulsory for validating an area of demand. Here it didn't, it dropped, it didn't consolidate away. As you can see, it rallied into the level right after its creation. So this is not valid. But yes, this is valid because it consolidated away with two candles. We just need one. Not only that, but it also removed this area of supply. So as long as the market conditions are the same, then we trade always the closest valid daily area of demand, which is this one. So this is the trade. Here is the trade. Confirmation type of trade. This is the set and forget type of trade, which would our entry would have been right there. Then after that we have this level there that was the one that caused the break of the trend line, and this is called a wow trade. A wow trade. Why? Because this is what you see. Tell me what you see here.
Yeah, wow.
That's it. And tell me what you see here. Inverted.
Yeah, inverted.
So instead of calling the type of trade like this, WOM, call it wow, because it's more wow.
So now, Alfonso, when you talk about, okay, back where you said your entry would have been,
yeah,
okay, and then price rallied, you have this other area of demand, price came back right to this level.
yeah.
If you had your entry there, just to go a little further, if you had your entry there, would you have gotten out of that trade, or you would have stayed in?
Once I see this up here, I would have let it go, okay, and then my stop loss would have, when I see a higher high there, my stop loss would have been there. So I would have locked in all this
So you would have, once your entry was made, the price rallied up, it dropped back down to the zone. You will obviously stay in that trade, and then you would have, like you said, your entry or exit would have been up there.
Yeah, exactly.
Or
You
at
could
least a
have,
target.
yeah. This could have been this could have been the target right there, because this is the area that caused the whole break. So you trade from here to here, and you exit. Then it happened that this level was taken out, the top. But when you go to the weekly, maybe we will see something else up there. See what happened there? Price could not close above.
Right.
So when you see that, forget about trading long. Wait for a bigger retracement. The same way, look for wow trade shorts in the opposite direction. So there it is. So as you can see there, this level was overshot. This level was overshot. But when you see this, you say, oh yeah, the daily closed above. But okay, let's look at the weekly. Oops, no way. Last month high here, and we couldn't close above. This is big boys taking control, because there is nobody but big institutions can't do this. They are the only ones that can do this, controlling price in such a way that we cannot close to the pip.
Right.
This is impossible. I mean, how many traders will be trading this? Thousands. And you are telling me that price is not going to close above that area? I mean, this is not possible. You cannot control thousands of traders There must be robots, buy and sell robots, created by big institutions that will not allow that to happen. They are manipulating the markets. Forex and the Forex, for example, is the biggest market in the world, and it is unregulated. How can that be?
Right.
How can that be? Because they do what they want to do. They will do whatever they want. They manipulate the market. They are market makers, and they are creating all these news about the euro now is bad, and then the dollar is bad, and then suddenly you see the opposite things. Or if the euro, if there are so bad news about the euro, how is the euro rallying?
Right.
Okay, so
Yes.
because what they normally do is that, okay, we are, imagine that this is the euro chart. Okay, imagine that this is the euro chart. What do you think is gonna be the forecast for the euro economy here, right here, when price starts dropping? Will it be good or bad?
Bad.
Oh, bad. Draghi, or now Draghi speaks. No, we have
Right.
to do this or we have to do that. What happens? He attracts the sellers,
Sellers. So,
the speculators trying to sell. And what are they selling into? This is where Draghi and his friends are waiting,
right.
because his friends know what is going to about to happen. What's about to happen? So they just position they are here waiting like hyenas, and they will buy. That's how it works. So you will see news, oh, this is bad, and then suddenly you see the opposite thing. How come? Impossible. It is possible because they are manipulate. They own the media. So they just are creating fake news to move the markets, to get the sellers or the buyers that they need in order to fill their orders. That's how it works.
Right.
They are professional and they want to make money. They don't care about the economy. They can how you say that, a country, they can destroy a country. I don't know, can make a country go into bankruptcy
Right.
like this,
Mm-hmm.
with a snap of a finger. I mean, like that, like they did with Greece, Ireland, Portugal. They did it on purpose.
Mm-hmm.
So they can do it. They can manipulate the markets or however they want because they have the money to do that, and the media to convince you that that is going to happen. So this is why having rules allow you to stay out of all those things, and then just go with the big boys where you see the impulses. This is the impulse correction, impulse, big correction, and another impulse and a correction. So the impulses are to the upside until down here where we start having more impulses to the downside until this level has been tested once, twice, 3 times, 4 times, 5, 6, 7. At the 8th time, this level was taken out. 8 pullbacks needed that level. And what happened then? This is the classic bear trap. Then breakout traders trading short. What did it bump into? Monthly area of demand. Here. Monthly area of demand. See, all you see here were the 7 tests on the weekly demand area. And then it happens that price drop where? What do we have here? A fresh area of demand on the monthly. Kiss and go. And that's how it works. The weekly area of demand had been tested already, so in order to trade the weekly area of demand, we need confirmation always, because the level is no longer fresh. So we need to see these things over and over in order to trade it again. This, you see? We need to see these kind of things when price drops into the areas. Look at this. See that? Then on the 4 hour, there should be this is the trade there. That price didn't pull back. here it almost did, and then price rallied again into the distal line here and then dropped again. Okay, then here you see another level there, right there at the top, and then when it dropped there, it dropped again, and now here again and again and again. It's same thing, always confirmation, always confirmation. So what I want to tell you now is that once we are there, once we hit the weekly area of demand, then you have to wait again for confirmation on the daily or 4 hour, because the weekly area of demand is holding. Now it is the weekly here. Okay, the monthly was up, remember here, and now the weekly is in consolidation. So if we want to go long again from after this touch, then we have to wait for confirmation, because the level is no longer fresh, and we only trade set and forget on fresh levels, like here, only on fresh levels. When the level is not fresh, we have to wait for confirmation, and confirmation we do that by using wow trades. Okay, the wow trade. This is a very, very important lesson.
Okay, I'm on review of that.
Which is exactly this, what I told you. This confirmation.
Yes.
Exactly that. Trend line break, you trade the level. So then, since the weekly lost momentum here for set and forget, so now the conditions are different now. Monthly up, weekly consolidation, which is the anti-time frame that we will use for set and forget to go long again, because the monthly is still up.
Monthly's up, weekly's in consolidation.
Mm-hmm.
We're gonna go down to the daily. Well, no, the higher time frame.
Yeah, higher.
Right.
Which is a higher time frame than the weekly.
The monthly.
So we have to, in order to go long again, set and forget. Okay, no confirmation. I mean, the level is good, I'm gonna buy. I don't care about anything else, about how big or extended the red candles are. I don't care. The fastest and the strongest the drop, the better the long, the buy order. So when you see red candles, you have to buy, and when you see blue candles, you have to sell. So that is illogical, but it's the way it works. So if the monthly now has lost momentum, and it has lost momentum because this candle over there and this over here, they have closed underneath the weekly trend line here, we could not look at this. We could not close. You see? Price was ranging between these zones like that, over and over and over, until it was removed down there. Okay?
Right.
So when you hit that area, okay, it drops. Where does it drop to? Look at that. Into the monthly area of demand, which is exactly, let me make it a little bit bigger. Look at that. Okay, the level was like that. There. Was the level fresh at the time?
Yes.
Yes. Had the level made a 2-to-1? Yes.
Yes.
Was the month in an uptrend? Yes. What else do you want? Buy. That's the way it is. This is the realignment and sequence concept playing out. So price rallied and made a high, then started to drop again, and we saw that scenario now. Okay, before we couldn't close above and all that. So now this is what we have. Let me explain to you. Let me remove all these levels. Okay. So this is what we have. Price retested the monthly area of demand for the first time, but look at this. What did this level do? What did this level accomplish? Over here. Wasn't it this? It could break the monthly supply. It overshot the monthly supply. The origin of that level there. Where was it? There. Sorry. uh, there, yes, but we were looking at the weekly, I believe. Yeah, on the weekly. This level on the weekly was the one that the monthly supply was like here, distal line. It removed it, it overshot it. And what was the origin of that action here? Okay, when you see these pink candle like that, look at this long tail. That means that there are a lot of buyers down here, lots of them. But you cannot trade the whole level; it's huge. So you drill it down to the daily or the 4 hour. So let's go to the daily. Remember that the month is up. Okay, if it overshot a monthly area of supply, this level of monthly demand overshot monthly supply. So is the monthly area of demand strong enough? Yes, it was the one that caused the break. Okay, so now we drill it down, okay, to the daily. That is the first touch of the monthly. We can see this turquoise line, which means it is the proximal line on the monthly. And now look at this. Okay, this is the trend. Okay, this is the trend. And now once we hit the monthly area of demand, okay, there, for the first time, the wow rules, okay, tell us that if it is the first time that happens, we don't need to remove any opposing area to validate a demand area. Okay, we don't need it. It's all explained here. Okay, everything here.
Okay.
Everything explained here, with videos and all that. Okay, so it talks about it everything here, wow trade, everything here, with a lot of graphics and examples and everything. And this video as well, that will help you understand better. So this is the origin, okay, on a daily, which you will see now painted on the weekly. Now you see that this whole weekly tail has been now drilled down to this area, because this is the daily. Okay, you can also do this. Your daily time frame is not your entry time frame. It is the 4 hour time frame. So, okay, this is the daily. Let me draw a vertical line and let me switch to the 4 hour. Okay, then we have a 4 hour level within a smaller. Okay, so now you go to the 4 hour, and now let's go to here. See the 4 hour in present time. So you can really do the 4 hour, or you can say no, my entry time frame is the 1 hour. So you go to the 1 hour. So you can even go to the 1 minute, but that's too much. Okay, so you have to stick to a time frame that doesn't change that much. Otherwise, you will have to be in front of the computer like a zombie all day long.
Okay.
So you just decide 4 hour. My personal entry time frame is the 4 hour and daily. I do have 2 accounts, 4 hour and daily. So I trade on an account. I trade 4 hour levels, and another one I just trade the daily. I don't even look at the 4 hour. So now that price hit a monthly area of demand, okay, we can, if there was a level here on the left on the daily that was available, that was not, then we could trade the daily area. Imagine this: if this level over here, as you can see here, would have been here, I would have taken that long. Set and forget, because it is a daily area of demand within a monthly area of demand with a monthly in an uptrend, first time being hit. But this is nothing. Okay, it worked and rallied like a rocket when it was retested. Okay, it dropped until down, let me see, there, this is the lowest low, so it dropped down there. But where do you think price, how can you know it's going to drop there, or it's going to drop here, or it's going to drop here? Because the level is big there, so you just don't know. But you know here. So if you copy and paste this image this imbalance over here, then I would have taken it. But it was not the case, so I have to wait. Okay, so I have to wait, and price didn't pull back, as you can see. But then we have here, the trend line would have been more aggressive and all that. So you just don't care about anything else. You are looking for imbalances. So here, this is a weekly area, sorry, a daily area of supply there. Okay, that was taken out. Okay, and here we have an imbalance. Here we have another imbalance. Okay, and all that. And once we have that, we have this trend line. Okay. Once we have that trend line, and then the trend line on the daily is broken, so we are not allowed to go long again, unless this is a weekly area of demand. You see the logic?
Yes.
So is there a weekly area of demand here? Probably yes. Why? Because there are more than 4 or 5 candles on the daily, and a weekly area is CP pattern of demand, continuation pattern on the weekly is made of 4 or 5 daily candles ranging in the same area. So let's try and see if this area over there had had a weekly area of demand, because as you can see, the daily is in an uptrend now. But now this candle over there, okay, has broken the daily uptrend momentum. So if the daily uptrend is broken momentum, which is the time frame we have to look for in order to trade long again?
The higher time.
Which is a higher time frame than the daily?
The week.
The weekly. That's the realignment rule. Remember, the month is still up. Okay. So now let's look at the weekly here on this white trail line, vertical line. Look at that, my friend. That candle, okay, there. Did we have a weekly area of demand? Look at this. Trend line on the weekly, which was the level that caused the break of the trend line. Can you tell me?
This the blue.
Look at this trend line on the weekly. Connected
Right.
this peak, this second peak, dropped, and what is the level that caused the break of the trend line? That one level. This is a weekly wow trade. So look at this. And then you've got the all here.
Retested it twice. What?
Wow trade. Retested it. So, and it is bouncing from a fresh area of demand on the monthly, with the monthly in an uptrend. So what is going on now on the weekly? The weekly is trying to realign with the monthly's uptrend. That's it. And how does it happen? It happens when the weekly has a bigger retracement into monthly area of demand, proximal line, rallied. Look at this candle, this doji gravestone, rallied, base, rally, removes this supply zone because it removed this area over here when it dropped, and then the area that caused the break of the trend line is exactly that one area. So it rallies, it consolidates away with one candle, two candles, it makes 2 to 1, great imbalance at the break of the trend line, go long here. Is the level well formed on the weekly? Does it look clean and well structured? Yes. But when you look at the daily there, what do you see on that area? Let me draw with these two, since we don't have the yellow area. It is broken, then the indicator will not draw the trend lines there. There. So now we'll drill it down to the daily, and this is the weekly area, okay? Right there. So look at this. Okay? we have on this area over there, okay, it was tested once on the daily. So the thing is that since it was tested once here, this was a valid trade on the daily, as you can see. Rally base, drop base, rally, made a higher high. So this would have been a valid area on the daily. When it rallied, it created the weekly area of demand there. Okay, when it rallied, because we had more than 4 candles here, 5 candles. It rallied, but the level was tested already, so we cannot trade it and set and forget. Once a level is tested normally, it will penetrate it a little bit lower. Okay, so it penetrated a little lower. It was tested, you see, lower and even lower. So we couldn't trade it. Maybe on the 4 hour there was a confirmation type of trade there on the 4 hour. Okay, because daily was not possible because it was already was not fresh. Right? Okay, so here we have a 4 hour trade there. That one. Okay. Drop, base, rally. So this is the entry on the 4 hour. If your 4 hour was the entry time frame. But what I wanted to show you is this, that we have a weekly area. This is why this area is valid, and this is why most of the time, not always, price will react and will hold. And since it is a monthly area of demand with a weekly wow trade, normally what happens on how many levels here? What happens is that price will travel normally from demand area to opposing area. Okay, so if the trade happens on a monthly, expect price to reach these areas. So if on the lower time frames you start having high probability trades like this wow trade over there, let it go. I mean, do not move your stop loss. Leave it down there until it creates a higher high and rallies. Leave it there for weeks. This is position type of trading. But the same applies to 4 hour entries with the daily wow trades. Okay, so the bigger the wow trade, the time frame where you have the wow trade, the bigger rally or drop you should expect from price. So this is the level that was holding. Okay, now, okay, we will finish in a few minutes. Okay, because it's long already and 2 hours. But let me show you this because we will complete this and you will have a better understanding. So what happened here to the trend line on the weekly? Here.
Broken.
So 2 valleys broke. Now what is the trend on the weekly? Here, at this moment. It broke. If the weekly uptrend is in consolidation and it broke, which is the time frame we have to wait for in order to trade?
The monthly.
Monthly. Trade set and forget, okay? We can do concentrate, okay? But that's concentrate. Adding it now is very, very advanced. Try to be consistent and profitable with trend trading, and then after that you may decide to do counter trend, and then you may ask yourself, why should I counter trend which is lower probability if I am profitable trend trading?
Right.
That's a very important question.
Yes, no, exactly.
Why should you?
Alfonso,
sorry, you were going to ask me something.
I was going to ask you. Yes, no, I totally agree with you, and that's what I need to perfect. And can we take a look at the Euro Australia?
Yeah, 1 sec, because I will finish this 1 sec. Because since the weekly was broken, the trend line was broken, we have to wait for price to reach a monthly area. What happened here?
Monthly area
of demand. So is there, since this area, look at all of buyers, this touch and go trade that we drilled down to the daily area before, made a higher high, and remember what this level accomplished. It took out monthly historical supply. This area here was the cause of the whole move up. Do we have a nice level on the daily? There. Yes. Can we trade this and forget? Yes. That is my trade. That's the whole explanation why that trade was taken. I drill it down to the 4 hour. and it was a better entry. Okay, so now I will do this. I'll move my stop loss around here. Well, market is closed, so it doesn't allow me to do that. So, but I will do it. Okay, so now here the trend line connects one valley and another valley and another valley. So this is the trend on the daily. Now we have to wait. If this area is removed and all that, then the weekly area is already removed here. Let me remove all this. So many lines now. What is this, my friend? Weekly area of the rally, base, rally, and removes supply. So if price drops into that weekly area of demand, do we have a level there? This is not great, really. We do have another level down there, which is better. There, that one. Okay, there it is. Because the weekly, yeah, that one. So that could work. So monthly still now. Monthly is consolidating, but it is trying to range and rally into that area. So we could start now having longs again, because now we have the weekly time frame making higher highs, creating areas of demand, removing areas of supply. So this is how it works. This is the present time. Okay, on all this way down, you could have had shorts on the daily. Okay, like here, look at that. One short, consolidated away, dropped, one short, second short here, dropped, closed, and both underneath this compressed area, another short there. So there were a few shorts on the way down on the daily. Okay, on the 4 hour, I'm sure I'm more. So on the Euro Aussie.
Yes.
This is Euro Aussie. What do we want to ask from this one?
Now I was going to say, what was, if we looked at that on the monthly,
this is what we have.
that's what we have. Okay, so
this is what we have. We have this trend line broken.
trend line broken
Yeah, and we have this.
on the month.
This is the supply area in control. And now the month is in an uptrend, but trend line broken, and we are within the month. Now, what is the trend on the monthly? Up or down?
In consolidation.
Yeah, consolidation, but bullish consolidation or bearish consolidation? Because we're still up. Have we removed any area of demand on the monthly?
No.
What is
No,
what is the definition of an uptrend? Monthly areas of demand areas are respected, supply areas
Demand
are
respect-
taken out.
removed.
Has
taken
any area of demand been removed?
No.
No. So we are in an uptrend on the monthly, but consolidating now. What is here on the monthly, on the eBay? Look, we said that, same thing. Monthly in consolidation, but
No.
we are in an uptrend.
An uptrend monthly. Yep,
So
exactly.
it is the same thing.
Same thing.
Same thing. Okay? So here, what do we have here? Weekly nested area of demand. Okay? So month is still in an uptrend but consolidating. Do we have a nested level? So we have to wait for a monthly area of demand to trade. We are already there. It is too wide. Okay, let's drill it to the weekly area there. What is the trend on the weekly? Definitely down. Connecting the latest to that. Okay.
Weekly is down. Yes.
So is this supply here? Is this supply? Is this supply? Is this supply? Tell me. Yes, no. I mean, there's only two options. One option, sorry. For yes
No.
or no. No, why not? Because not only do I need an answer, I need an explanation.
Yeah.
It's very simple. What
Is this?
does, ask yourself same question like we did on the monthly. What happens
Other,
in a weekly downtrend?
is the demand being respected and supply
In
areas
a
being removed?
downtrend, demand is being removed, taken out, and supply is being respected. Okay, so has until we hit one time frame, higher time frame than the time frame where we are assessing the trend. Because if we reach now a monthly area of demand and the month is still up, forget about shorting. So has this area of supply, okay, let's say supply for now, taken out any area of demand?
No.
Out. Has this area of supply taken out any area of demand?
No.
Out. Has this area taken out any? No.
No.
Out.
No.
Has this area taken out any?
No.
Yes.
Well, that
This one,
has,
yes. This one.
Yes, I see it.
Rally based
Okay.
rally. So
Yeah.
the only valid area of supply on the weekly is that one. And the only area of demand on the weekly valid right now is this one. We have all this room. How did I make the decision not to take into account these levels? By asking myself the same, sorry for the word, the same bloody questions. What is the trend? What defines a trend and a downtrend and an uptrend? Has it removed opposing area? I mean, as long as the trend line is holding, okay, it's holding, the bullish, on this case, bearish engulfing patterns here get automatically validated if we haven't reached one time frame higher than the time frame where we are detecting the bearish engulfing patterns. Here we are very high in the curve, a lot of room to reach the opposing monthly area of demand. Here still, okay, high, we have not hit the monthly area of demand. Here still, now here we have hit monthly area of demand. Forget about shorting, only in confirmation, because you would be trading against a monthly area of demand. Okay, so that's the same logic always, same logic. As you can see, now a weekly area of demand has been hit, and this area on the weekly has not taken it out. So no areas here. These are no supply areas. Because of that, it hasn't taken the extreme area that made price rally like a rocket. So now what do? We wait for confirmation type of trades. Well, this is like sort of trending like that. So let me do this. We are within the weekly area of demand, okay? And there was a level down there I was looking to trade, but the thing is that it was wiki and too wide, okay, like that. You fell short of it. See, 150 pips. This is not normal. Normally a daily area on the Euro Aussie is like an average of between 80 and 120 pips normally, okay. So you can see here 81. So this one level here 78, 90, 80. This CP pattern is like 60. This one is almost double. So when you have these long wicks there, price will tend to penetrate it lower. Okay, so what could happen here is that price will do this or not, you don't know. Will do this. This is a level there. Price will put probably right there, then dropped, retest the level there, and then rally again. This is compressed. This is nothing. This is nothing. And this is the only area that could cause, because it's higher, could cause some, because the drop was good. I'll remove this area. But other than that, there is nothing else to prevent price from rallying to that area. So if we rally from down there and we remove these areas over there, then we will have price doing this. That's it. So now we can use the WOW trade rules to trade 4-hour and daily WOW longs. So now on the 4-hour, what we do have here, that we have a rally. Here we have this, and then we've got another level there. So if this area over there is taken out, then we have this level of demand validated, and price could do this. That. This is compressed. And this is the way it is. That's all. This, I mean, I summed up the whole strategy in 2 hours, more or less.
Right.
But this is the way it is. And the way to have this quick assessment of all rules, there's only one way to do that. Hours and hours and hours and hours of practice.
Right.
Not only this strategy, but any strategy that you may try to trade.
Well, this is my strategy, Alonso. This is it. So I'm going to be. I'm glad you were able to take the time to go over some of these the rules with me. You know, now it will make them clearer. Plus, when you send me the link, I'll also be reviewing the this video here over and over along with the rules too.
Yeah. Read the lessons as many times as you can. Please watch the videos over and over. And repetition is the mother of all sciences.
Right.
You have to repeat over and over and over and over again. I mean, this the how can I do this? Because I have done this thousands of times. Because I can open any chart. Okay, let me tell you. Let me show you how fast this can be. Let me open anything that I have, like, I don't know, this HLT. I don't even know what it is. Okay, this chart, never seen it. Okay, so see how fast this is done. Monthly is in an option. I just can only buy. Oops, that is the daily. Sorry. Daily. Well, this is the only chart, the only history that I have. So it's up. Monthly up. Weekly up. Monthly area of demand. Weekly area of demand. Weekly up. Monthly up. Daily up. Okay. 4-hour up. Okay. So we can trade this level over there. Okay. So good departure. This has already been testing on the departure, so not good. And this is at a flip zone there. As long as we have the trend line respected, we cannot draw a trend line because we don't. Yes, we have. Okay, we have a trend line there. We have 1 CP, 2 CPs, 3 CPs. This is a trend line, aggressive. If price drops into the level in the next 2, 3, 4 candles without the trend line being broken, this is a valid entry. Else, which will be our entry time frame? Now we are on the 4-hour.
We're on the 4-hour, so we have to go to the higher
Daily.
time.
So,
The daily.
so if the trend line on the 4-hour is broken, this is our time and entry time frame. So I will be waiting for price to drop down there and rally like that. As fast as that. You can do that in 30 seconds on a new pair, and you don't need any indicator, nothing. But how to do that? Thousands of hours of hard work, testing, and forest testing, and all that. So by just looking at that, I mean, it's very easy to say where I want to try a high probability trade. May it work? May not work? I don't know. I just trade the rules. If the rules say yes, I trade it. If it doesn't say, if it says no, No, if it is doubtful, you are confused, what do you have to do? Nothing.
Not true. Nothing.
Wait and learn from the experience. And after you do that hundreds of times, then maybe you will be able to come up with a small nuance of a rule that will allow you to say, hey, I'm going to draw this level like that, I'm going to drill it like that, because I've seen this situation happen many times. And then you do it. But I cannot add those nuances to the rules, because if I do, then you will get confused. You have to have the general rules, because the nuances will only be understood once you understand the general rules and you are already consistent and mechanically applying the rules. I cannot tell you the nuances, okay, because of that. And that's it, okay? That's it. So
all right. Well, Alfonso, thank you very much.
Okay. If you need anything else, just tell me, okay? So watch the videos,